Hello and welcome, and today is crypto day. It's the end of the 17th day of May 2018. I'd like to welcome you to this evening's video, and like always, everything within your own risk, own reward. And let's talk about volatility. This is about the only, or one of very few coins that has a really nice setup right now. But we're talking about volatility to start. This low is between 58 and 60, so I'll pierce below 60. We'll say 59. This high is near that 76 number. 17 is the differential on the basis. 17 over that of 59. Well, 20 on 60 would represent that of, 33%. So you're looking at the 30% move within the day. I know that's interesting volatility. And let's just think about this from a stock market. How many stocks have you seen go from somewhere around $60 to 76? And then within the day, a good chunk of the day rather, it pulls back to $68, and now it's looking to go past 70. Well, of course, crypto day is every day because it never closes. Stock market day isn't every day, it isn't every hour. But they do move in situations where you can make plays. And well, generally speaking, a stock would go from 60 to 76. That might be its performance over several weeks. And that's a big move for it. So within this low volatility, let's not say this is high, because that would be incorrect. Because high and low is when you could judge it within other events within its sample size. Let's just scroll back a little bit. Okay. That's why you say it's low, because you're comparing it to going from, say, 50 up to 160. And then coming down to over 70. I mean, these kinds of moves, the only way you can get in on these orders, and I didn't see it, definitely through sell orders no matter what. If you had a sell order placed at 122, it's 100% it got executed. There's just no wondering, oh, did it go through? No, it went through. The only way you'd be wondering is if you knew your sell order was somewhere around that 16 number. Because there's going to be people, what's the high on it? 155? Yeah. So if you had sell orders anywhere, say, between 155 north to like 160, that sucks. It's bad luck. That's nothing more about it. But if you happen to be there at the time, you're watching it, and oh, it's going up. It's like the 80 handle, 90, 100, 110, 120, and then you just push the sell button because it's just too good of a deal when it goes up that fast. And yeah, that's some monstrous volatility, to say the least. And this is, again, just a single hour time frame. When we look at this on a single day chart, pattern recognition. What does a pattern show here? We see this level in here. Of course, this is where the most recent lows are. And then establish a level of resistance in here, or a range in there, thus supporting. Well, the floor was the ceiling here. Floor becomes the ceiling. And it almost is like either way, it's almost like a architectural lens, whatever those designers, whatever you call it. But anyway, it gets past this level in here, saying we want to go to the next floor. Only problem is we don't want, let's assume this is your standard, like, I don't know, 8, 9 feet ceilings or whatever you have. We'll say 9 feet, 10 feet, whatever. This is 10 feet, 10 feet. Yeah, we want larger than 10 feet. But technically speaking, it's like this. If this is the ground floor, this is the second floor. Yeah, we're going to go past the third floor, take a huge spin up. Maybe they pushed the wrong button. Maybe they pushed this. They were on the second floor. They pushed the elevator. They wanted to push 4, but they accidentally pushed 8 or 9. Oh my goodness, we accidentally pushed it. Then when it got to 9, they had to push 4 to go back down. So that's what makes the most sense, I think, with the elevator button pushing theory that you're going to research nowhere. But since the failed elevator move, it comes back to the fourth floor, is hanging on there, but it's managed to, it's trying to get into the fifth floor. Or it's broken resistance, it's left the 18 average. Pretty darn near good setup. So if you're looking for something that might have potential during these times, this may be it. Let's move on. This is SYS on the daily time frame. All I'm going to say here is within this hourly move, monstrous move, you go from 44 or 45 to 58. That's a basis difference of 13. So again, we're looking at about a 30% move. Now back to this correctionary area. Now, how's it going to react? There's two ways it's going to fail. One is it comes up here, makes some sort of higher low, or lower high rather, maybe matching. And then you notice the move back stays within the 18. Then you probably got a good chance of maybe coming down here. But when you have this test, if it just stays here and it keeps rejecting this 18 average, or at the current time frame 53.20ish, then it's very common that you're just going to have a move that would come down towards such. And right now, a lot of the altcoins may be going down because the main coins are bearish, like Bitcoin and Litecoin against the dollar. For Bitcoin, it's now approaching the key Fibonacci level. And of course, I've explained earlier why I think this move is going to happen. I stated this a few times. In fact, on the 400-minute time frame, it was a break of this support around 8,900 when I stated that that's a good time to short. And if you play any kind of stop-loss game, you can never stop out unless it has a decent break above this 18 average. But it would mean that as this is rolling down to 84, 83, you would move your stop either even barely above this line, barely below this line possibility, but somewhere nicely above the 76.4 from this low and this high. It's been going down, so this is where you would normally lower your stop. So if you say had a stop before somewhere up here, you've had a down move, you've had a small 18 average play. It didn't spend much time there, as it instantly had a move there, came back down to the lower areas, did the same thing again. Then it had a period where it closed at the lows, it consolidated for one further period within, and then it started rejecting it and leaving below. So very small times within such. So as far as the stops, I would probably suggest maybe somewhere above this line, maybe around 85.20. And yeah, or even sometimes you might want to go a little bit below, like 8,400. And oftentimes I'd be looking for price targets to sell down to. And there's several. There's one is around the 7,300 area, which would represent about a 61.8% correction from this low to this high. The next is where it came from, and that's a decent size range from about 6,700 down to a pierce below 6,000. Several exchanges did have this move pierce below. And if you pierce extra, you're talking about 55. And that's just a small move on the more longer term time frame, because obviously below that, I don't have the lines drawn anywhere on it before, but 3,000 and 1,000 are the next two key Fibonacci levels. 3,000 would represent a 38.2% correction from this key low below $200 and the high near 20,000. 23.6% down is the 6,000 area, which already hit, and now it's pretty much hit a second time. This would be test number 3 of this area, if of course there's at least a decline of greater than $1,000 more. And there would also be one below that at 1,000, because I come from the school of thought that if you're not playing any fundamentals, and even sometimes when you're playing fundamentals, they're not going to do you any good, because the market's going to do what it's going to do, and it doesn't always go based on the true supply, or we'll just talk about markets sometimes are played differently, so that the moves may not represent how reality really is. Basically, institutional buying and selling. But I come from the school of thought that you see a setup and you have probability odds for what its intended situation is to do. So I put a video out earlier about one leg lower at least being very probable, and it's of course down a little bit since I stated such earlier. And then you look at the probability odds. If it comes down here, what's the chances that it holds? The fact that there are extra participants adding into the market, it would be higher than normal on a fundamental level, but it is normally pretty strong. That since the market has hit the 6,000 Fibonacci bottom on February, there's been a lot of time in the market, about 3 months, that any price action even near that area, 6,800, 64, that we're looking for one leg lower on this time frame. Because just like I mentioned for the reasons for why you would see for why Bitcoin was going to go lower on like the daily term time frame. Well, we're looking at this on the weekly. It hits the 18 average sideways after it's moved lower in January, and it goes below and stays within for a decent amount of time after having a small 23.6% correction. So it's had several opportunities to revert the trend, and it hasn't done such. It comes back close to this level, very bearish situation, but it didn't pan out because the bull market came in for a few periods, but it's a lower high to here. And now this 18 average is declining. So as I state, you have a declining 18 average. You came from an area with the previous low, so it's in the 6,000s. If you're leaving this 18 after getting to the 18 average of lows to closes, and in this case, when it's barely below the 18 of lows, I'd like to see it go to where it did the closes. But if it's leaving such and you see it near the lows, not even a break below, the probability odds become very high for the leg lower. And the leg lower on here, well, Fibonacci says it's 3,000. And that would work out to about the same equivalency of a point A to B, and then A, B, C. A being this high to this low, and then B to C, this level to this level. Because it went from here from 20,000 to 6,000. Here you'd be going from like 9,000 to like 3,000. So it makes sense that 3,000 would be the area. And Fibonacci levels have worked out so well in the past. And it's interesting, people think that just because they're not used to volatility, I guess, that a big move might be going to like 4,800 or 4,700 or 5,000. And if it does anything like that, that's just a small pierce below. If a bottom comes in where it's like 5,000 and it has a move where it rallies back into where it came from really fast and holds that situation, then that's a failed breakdown. And I talked about a few scenarios yesterday, with the first one being one where it breaks below 6, does go to around 5,000, and then just shoots up high from there. So yeah, that's that for Bitcoin. As far as LTC is concerned, that would be Litecoin against the dollar. What do we see on the daily? Same thing. It's left the 18 average. It is at the exact level of support where it came from. Bitcoin is what below it. But either way, when we look at this on the single hour time frame, this has been hit down pretty hard. We have now had 5 consecutive periods since the decent breakdown below, where the price has pretty much hardly had any moves hop up. The bounce was from 133.5 up to 135 and an eighth. So that's like more than 1.5, 1 3/4 or whatever. So the best rally you could have was like 1% in here, and then it's just tanking down again. So it's got a decent amount of time. How much longer this leg is going to go down? Well, it's already had a noticeable move. This is generally where I'd start saying, yep, we could stop going here. And I mean, it's not the greatest of odds that it's going to be the bottom, in the sense that we could easily come up, rally to the 18, and then roll over. Price action is at this previous level, but at the same time, it has had a noticeable break below it. Not uncommon to pierce below a level as a key area. That could still happen, but it does give you a little bit of concern that it has pierced below that point. Look at this on the 400-minute time frame. A very, very bearish situation. The decline since this top of 185. And when you look at this in perspective from the rally, because this thing has been beat up pretty hard. So you have point A top to point B low, which we're going to say is around 110. Then you go to point C high, lower than it was before, back to point B low, up to point D high, which is still significant lower than the last two, so two noticeable lower highs from before. And from the bottom, this is the one pattern in technical analysis that is really worth noticing, because you had this level of resistance that it broke. It had a decent gain. Actually, this is more than I would normally expect for this example, but not by much more. And it doesn't successfully correct this 18 average. You have this support in here. You resist the 18. And we can see this is a situation here where buyer beware, and it was a beware situation. But even from that point, you managed to go to this low, and then you make this low and this high. So this low is lower than this. And of course the high was higher than the previous one. And then matching low, lower high, leaving the 18 as it's now doing, back to a key area of support at which it came from with this nasty move in here. It seems likely that it tests at least down to the previous area in the 110s to 120. And the eyeball test would seem as about 120 to 121 would be, I think, a minimum target for where this setup should take us to. Now let's look at a few more altcoins, starting with Polymath. I love math. However, Polymath, I don't know what the poly stands for. Polyester? I doubt it. In a situation here, several periods on the 400-minute time frame, consolidating within the 18 average band, breaking down below, and furthermore on these last two periods, barely getting below this level of previous support. Daily time frame, I can at least now start to see data within the daily. 18 average of lows is in at about 9,400. So I'll be interested to see where that level comes into play as far as Fibonacci analysis is concerned for anybody that is holding it. I'm not going to do the calculations, but I will tell you the formula. The formula I'll be looking at is 13,470 divided by 4,300 to the root of, I want two different numbers. I want 0.618. I also want 0.382. So do two different calculations and then multiply it by that same low of 38 as well. Again, those are the two areas I'd be looking at. But again, I'm not going to calculate them right now or in this video. ZEC is down 12% today against Bitcoin, as it's just having its correctionary move. You know, this is guaranteed to happen at some point. So the some points topped at 45. It could have topped at 40. It could have topped at 51 or 300, 6 times higher. That's what these markets do, have wild gains. Sometimes they'll be better than magnificent, and sometimes they'll be barely anything at all, and everything else will be in between. With that being said, the daily time frame, you have this 18 average screeching higher, so there can still be several amounts of decline. Where did it come from last? Where it might come back next to? I see support ranging in from about the 322 handle up on the Bitcoin to about 350. So 320 to 350-ish as where it is coming from. The 18 average of lows is in at 314-ish, 315. It's obviously going to be rising, and in a couple of periods it should get the 18 average should be over the 320 number. I'm going to put up 10x or the pay token on BTC just to show the reminder of the sick volatility that this market can endure. This has been nothing more than in a major downtrend. So it's either been crap from the start and the market has been telling you such, and it's going to keep doing so. And even if it is crap, either if it's then it still might have a decent move, and if it's good, it's obviously down so much it's probably really cheap to buy. But as far as any type of swing trading within this, when you have wild moves like this, it works for trying to buy low and sell high from strategies that I've talked about. Let's move on to the next code. And this is DGB, bearish setup. I like the 18 average and using Fibonacci as my main indicators. Only price pays, and to me this just works. This is your basic double top formation, and double top is basically two reverse user V's. So there was the first level, then it comes up to the 18 average, which before was rising from the departure on April the 10th through the top of May the 2nd. So this time it was sideways. But after this sideways move, what did we do when we hit resistance? We had a day of sideways pause from the 18 average. That's a neutral situation. But then the follow through, red candle down, and now two more consecutive down moves. Yesterday it broke barely below the 18 lows. Today it broke out below the 18 lows, and the 18 average is now declining. It's barely below the level of support, but all points intended, it is at that level. So therefore, it's at a spot that should find a level of support. With that being said, its risk reward doesn't seem too probable for me, because the level of support may only have resistance at around the 450 mark. There's a very good chance that's all you're going to get if you get some, because it's not uncommon when you have a situation like this that when you break a point like this, you're not talking about going down here. No, you're talking about going at least down towards there as an intended target. Let's move this on next to Redcoin on the 400-minute time frame. Chart analysis again. As far as the strategy is concerned about just buying when it goes up and selling when it goes down, it's been wonderful to do that. A lot of these codes are. This one's no exception. But as far as trying to predict price action, I'm going to predict that this is going to go lower as its next decent leg move. But an interesting pattern. The market coming in to this last rally break of the 18 was after it had a very good price correction from the early April lows of about 50 to the early May highs. A 1 month rally gain where this price did about a 2.5x against Bitcoin. A magnificent move. Then it corrected about a 50% down, but for all intents and purposes, it held and stayed around a 38.2% correctionary level. The one thing that I've talked about, which is very common in market reversals, is that you're going to have at least one rally attempt before it falters. And here's the one rally attempt before falter. Well, that's now placed in here, with, of course, this leaving the 18 average on the 400-minute time frame. It's doing so with it being neutral, and it should be, given the fact that great run higher, great price correction lower, and great correction from that great price correction lower. and it's corrected much lower since. So it's had a lot of volatile moves. But because the market's most likely in Bitcoin and Litecoin, and the main cryptocurrencies are probably going to go down against the dollar, then this one probably will too. And one simple reason for why altcoins go down more when Bitcoin does is because people see, oh, I got to sell some Bitcoin. But first, they got to sell their altcoin so they can sell the Bitcoins they would sell it for. So a situation here, you got the price at 91. Someone's got, say, a quarter of a Bitcoin worth that they sell. Then that quarter Bitcoin plus whatever other Bitcoins they got from other trades, they'll sell on the market. So that's one way. And then the opposite's true when they buy it. They buy the Bitcoins, and after they buy the Bitcoins, they buy it up on the market. And that just has decent volatility for people playing with large size moves. And then, of course, the more people doing things like that, a lot of different reasons why people are buying and selling. And there's going to be points where there's just going to be more sellers and buyers. And it seems as if we're reaching that area right now where there's going to be more sellers and buyers in general for cryptocurrencies. There always can be news coming out about Redcoin for whatever reason, or just somebody who's just so eager to buy with big, not institution type money, but just whale type money, we'll call it. And that happens, that's just going to make the market do what it does. Now let's talk about Verge. Wow, this thing is in a very bearish setup. As we see with this 18, the last decline at around the 760 mark comes very close to this Fibonacci line, pierce above by about 10 points, percent and a half. It stays within this 18. The declining move doesn't lose much of a rate of descent, keeping a good rate of descent in place. And then the move takes it pretty much directly to this low. I got a Fibonacci line at 644. The bottom comes in at 643. Resist to the 18 average, near the 18 average of closes, but we can see that same pattern, how it's leaving it barely below it, so it's probably in line. But we can also see that it had this support test back on April the 24th, and it had a half-assed rally compared to, of course, the ones that it had that preceded it on the daily term time frame. When we look at this within Fibonacci analysis, I got a number at 494. So we'll see how that goes. If you're looking for an intended target, that's just what the numbers state. Let's move on to the next code. And that next one will be Stellar Lumens, or just Lumen we'll call it. XLM, of course, the codes are always on the top left side. The name is available to read as well. There we have it. See, when I talk about it's moving here, I can say this two different ways, and either way probably be right. One, typical. After leaving this 18, it barely breaks below this 18 average. That's the failed move. And that could probably be correct. But I also talk about how after most highs, usually it's going to make a lower high or close to matching high second move before declining. So this might be one of those unusual times where the second move is from this 18 average of lows, the rally from April the 26th upwards to May the 1st. Either way, how you look at it. The bottom line is it finally had a good price correction on the daily chart where it finally went below the 18 of lows. It took about 8 or 9 down days in a row. 3, 4, 5, 6, 7, 8, 9, 10. 10 days in a row going down. One really good up day and a decent up day, but it got to the 18 highs, and now this is 4 consecutive days going lower. Day 1 stabilizes within the 18. Day 2 moves to the 18 lows. Day 3 just stays and consolidates and resists that point. And day 4, today's day, on crypto day, it is exiting that to the downside. So I got a line in at 228, but just blindly looking at where it came from and what a decent leg lower would be, I'd be looking at about 3165-ish. THC, as we can see, after dipping below the 18, It comes up to it, resist it for about 6 days, but today's session is leaving that band. Let's just look at some random ones. Power BTC. This is just an interesting one because notice how price action comes back up to this previous high, and it just comes back down so fast to the 18 lows after it already spent several days below it. Before that it had a good rally. This is weak. 400-minute time frame or even 3-hour time frame. Let's look at this move more closely. This was spread out from May the 12th in the morning to May the 15th at the end of the day. This is Eastern time that I am showing you for times on this. And then the price goes down to the 18 and then it settles in and it's just grinding its way lower. That's very, very weak overall. So within this, definitely a lot of caution because after exuberating a good move, I think a conservative mark is just retesting anywhere within this range between 3,800 to 42. And it could even go below 38 since I mentioned that to be conservative. And then you got stuff like this, PivX on the daily chart. Yes, it's got weakness in the fact that it's been hovering the 18 lows. It still, however, is flat, and any break below will make it start to go down, start to decline. So definitely cautionary signs there. And if the whole market goes down, then you can expect that the vast majority of these altcoins are going to do so as well. Tron, we can start to see a bit more action on the daily. And after its beautiful gain, leaving the 18 on April the 23rd, leaving it at about 590, going up to about over 1,000, so almost a double. And that of 4, 5, 6, 7, 8, 9 green days in a row. And not only that, but how many days without any real down days? It went from April 14th all the way to May the 1st, going from under 500, thus getting better than double gains before the price correction came in. But it's had the gain. It's had a good 2 weeks to settle in at about 880, and then it didn't like 850 too much, so it went down to 820. Definitely not liking its gain too much. 18 average has now barely started to decline. It's not the easiest ones to call from this point, but again, I think this is going to probably tend to move where the base majority of the markets go, or where the market cap goes, basically. And I'm going to conclude this video with Omi's Go. Last code. Fun video. Thanks for tuning in. Put some comments in down below because I'm just going to quickly show you something here. This is really annoying. This is the comments. I mean, the thumbs up here. 6-0, 10-0, 11-0, 10-1, 10-0, 10-1, 5-0, 5-0, 12-0. They're fantastic. But 7 comments on BTC pattern shows another leg lower probable. There's only 1 real comment. Generally speaking, on a real comment, I'll go like that. Held for review. I usually, within these, this is just spam. Usually Zilka gets hit. I don't know. It's almost like they got a program that states when I upload a video that they just get notified and they spam these comments and hide this user's comments on this channel. I normally don't have to do this with held for review or likely spam because there's just 2 more, and these happen all the time, over and over. The ratio of real comments like this one to the spam ones is getting to be about 1 to 4 right now, so it's pretty sick. It's almost like being infested with a massive amount of bugs or leeches, if you will. It's like you're at an apartment building or where you're living, and next thing you know, you see 500 beetles just like leaving right around your computer desk. I mean, it's just a major infestation, it seems. Anyway, back to the final chart, and it's that of, again, Omi's Go. So the moves, when you see these in place, you got your sell orders or you happen to be active in the market, Profit taking, so important, even overall in the long-term time frame. Moving from from March the 3rd all the way down to this Fibonacci bottom. Buy, 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 buy. It was okay to sell at 137 if you bought down here, and then you bought more after selling 137. And if you bought here and you waited till like 150 to sell or something, great. But you got to get your sell orders when they go up, and then you get your buy orders back when they're going down. And in situations like this, sometimes for me, an advanced situation is, okay, I sold up here, but I want to buy this back now. Even my computer is telling me I should make a small buy. But if I think it's going to go down, you know, I'm just going to wait some more, because instead of buying now at 152, I'm going to try to get in around some 141 action kind of deal. The setup says it's probably going to do it. After all, just like I've been stating within this pattern, it's on a lot of these different codes. 18 average is declining. You have a rally to this case, the 18 lows. And you see how it's reverse U-shaping, making a nice little titty formation, however you want to name it. That's a nice little term. But it's also now broken below the you-know-what line. Yeah, you can envision that line how you wish. But it means that there's going to be a decent leg lower, probably high probability chances that we're going to see around the 140. And then you got the gambling play. You know what? Why don't I just sell everything and buy it back at 140? If you're right, in a spot like this, you would gain about 7-8% more back. If you're wrong, your position's lost and it's going to go higher, obviously. All right, but that means, again, if you're looking to buy back, you've been buying back since these highs. If you sold at like 190 and then you're like, oh, I just bought some at like 160. Oh, I bought some at 155 even. Well, okay, if it goes down to 140, buy some more. Depending on, of course, your volatility, how much you play. You could be looking this at a weekly term time frame and playing the data from something like this. Thank you for tuning in, and have yourself a great day. Bye-bye.